For now, the first tick on the index is very quiet, absolutely flat.
Global cues are largely muted. Markets are absolutely flat.
Nifty is at the day's low, closer to the day's low, 67 points lower there.
So around 19,430, which is even a little lower from where we are right now. Perhaps risk reward gets a little better.
The Nifty up close to around 55 points. When you got up today, if you saw Brent, if you saw the dollar index and you saw the US yields, you would say it's going to be a bit of a wobbly day. But that's the kind of market texture. The buy on dips is working. And just take a look at the index. We're up 50 points. The Nifty Bank on the verge of moving into the green.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock markets reverse early losses to end in the green for the 4th day in a row. Sensex and Nifty closed with modest gains held by FMCG and pharma stocks, but Bank Nifty fails to keep its head above water. India is ready to play a larger global role in the global landscape, says Prime Minister Modi in an exclusive interview to Money Control. Defends the government's record on inflation, saying prices in India are below the global average. Crude prices hit the highest level in 10 months as Saudi Arabia and Russia extend supply cuts to the end this year. Brent crude breaches $90 a barrel in intraday trade. Geo Financial Services corrects ahead of its NSE indices exclusion, which will be effective from tomorrow. Torrent Pharma gains after brokerage firms Nomura and IIFL issue buy rating. Jupiter Lifeline Hospital IPO opens for subscription. Gas stocks rally on high power demand in September. Sugar prices in India soar to a 6-year high ahead of the festival season as estimated output falls over 3% on a yearly basis. There is speculation in the market surrounding a likely export halt. Marquee sugar stocks rally in trade. Okay, those are the top headlines, but first up, the day's trading action now. Market regained intraday losses to end higher for the 4th straight day. Nifty gained 120 points from lows, while Sensex gained 392 points. Both indices ended mildly in the green. Broader markets underperformed the blue chips, with banks falling the most. That index ended 0.25% lower. Prashant Nair is here with the details. Prashant.
Well, it was a slew of negative cues, right? Oil at $90, dollar index at 105, yields higher. So the start in the morning looked wobbly, and it was a wobbly start. I mean, actually, the entire half a session, the first half was wobbly. The market drifted down, made a low of just under 19,500 at 1:30 p.m. For between 1:30 and 3, the market drifted slightly higher, but the big move came post 3 p.m. Between 3 and 3:30 is the change that you see with the Nifty ending higher. Banks, well, they lost more at the lows earlier on, so the recovery there was much larger, almost came back into the green. Broader markets, mid-caps and small caps, between 0.25%, 0.5% cut after many days, but then there also some recovery setting in. Advanced decline, though, was almost 1:1. Nifty gains coming through in Tata Consumer, again a last 30-minute mover. Divi's and Bharti were the others. Some pullbacks coming through in metal names, Tata Steel, Hindalco, and NTPC. Power stocks have had a fantastic move, and they pulled back today. It was a mix of smaller sectors which participated in the broader market. So sugar, fertilizer, rice stocks, paper stocks. The assortment of names up on your screen. So you had Renuka, Dhampur, Mavana, Ugar Sugar, Dwarike Sugar, which participated from the sugar pack, RCF, Madras Fertilizer, FACT from the fertilizer pack, JK Paper, West Coast, TNPL, Orient Paper from the paper pack, and KRBL and Dawat from the rice names, really, which went up. There were some electronic manufacturing companies like Syrma and Avalon, which also participated for the second day running. Strong gains coming in there. Railway stocks, which have had a breathless one-way rally, pulled back. So IRFC, RVNL, Ircon, Titagar, Texmac over some of the stocks there, which cooled off. I think it's imperative that oil cools off. Actually, not just oil, but dollar also cools off from where it is, which is about 105 odd levels. And I think that will give us more comfort from a global perspective when we come back tomorrow. Back to you.
Okay, Prashant, thank you so much for that. An interesting trading session today. But let's get you some market opinion. Pankaj Tibrewal, who's Senior Executive Vice President, Fund Manager, Equity at Kotak Mahindra AMC, believes that there is a need to be cautious on small and mid caps as the cycle has become shorter and sharper. Tahir Badshah, Chief Investment Officer, Invesco Mutual Fund, says that there are chances of earning surprises going forward. Listen in.
Our view is that cycles have become shorter and sharper. And to survive in the long term and create wealth in the long term, we need to be cognizant about the near as well as short term. And there we believe that mid and small caps, we need to be a little careful. and cautious. There's a disconnect between the profit distribution and market cap distribution right now. So mid and small caps as a percentage of, free float market cap is about 31%, nearing all-time highs. When I look at the entire space, yes, there are pockets of opportunity, but in the near term, we see that many market participants are focusing more on P&L rather than balance sheet and cash flows. And that's something which needs to be worried about.
I think we can't take away or wish away the fact that there are pockets of the economy, many parts of the economy, not just pockets, which are doing well and perhaps may surprise in terms of earnings as well. So what then appears to be apparent valuations versus real valuations, there could be a difference because you might actually end up having a fair bit of earnings surprise coming along your way.
Okay, some cautious outlook on the big caps and the small caps, but moving on to the second headline now. The big newsmaker this evening. India is ready to play a larger global role, says Prime Minister Modi in an exclusive interview to moneycontrol.com. Speaking to Network 18's Rahul Joshi, Prime Minister said, and I quote, "Our demography, especially the fact that we are home to the largest population of youth in the world, makes us extremely relevant for the planet's future. It also gives nations of the world a strong reason to partner with us in the pursuit of progress." End of quote. The Prime Minister also defended his government's record on inflation. He said, and I quote, "Even in the face of adversities and global dynamics, India's inflation was 2 percentage points lower than the global average inflation rate in 2022. End of quote. He also called for the world to come together to fight inflation, saying both advanced countries and emerging economies are facing high inflation. This is a global issue that needs close cooperation. End of quote. The Prime Minister also spoke out against what he called might is right culture. He said, and I quote, "Today, the pressure on national resources and infrastructure is increasing. At such a time, it is vital that the world strongly stands against the might is right culture. It must be recognized that shared prosperity through optimum utilization of resources is the only way ahead." End of quote. And finally, on climate change, the Prime Minister said, "Different countries of the world, especially the global south, are at the receiving end of the impact of the climate crisis, despite having done very little to create the problem in the first place." End of quote. And you can catch the full interview on moneycontrol.com and CNBC-TV18.com. Here are reactions to the Prime Minister's exclusive interview.
India is showing leadership on, for example, if you see some of the changes coming through on the global regulation of crypto assets, on how, at least trying to build a consensus around the issue of climate financing. So these are long-term issues. I think to expect a G20 level resolution to start impacting the economy in the very near term is something I think would be unwise.
I think macros are improving and I fully in agreement with the statement that India was able to or has been able to manage the macros much better, particularly on the inflation front. If you see that many countries are still struggling with the sticky inflation despite whatever rate hikes they have been doing. So I think while the focus, as stated by the governor himself, is that the inflation is the prime target they'll be focusing on.
Both the sort of the bilateral conversations that happen at the very top level, as well as what has happened in the B20. There are a lot of economic payoffs and benefits in terms of access to markets, in terms of the ease of doing business in other countries.
We need not look at the G20 presidency as only a short-term influence on economic growth, but it is more likely to lead to a confluence of positivities for the Indian economy that might actually provide or propel the growth on the higher side and in a more sustainable sort of fashion.
भारत का जो प्रेसिडेंसी रहा है इस G20 का इस पूरे साल, इसका बहुत ही एक तरह से एक लास्टिंग इम्प्रेशन दुनिया के देशों के सोच पर, दुनिया के अर्थव्यवस्था पर और दुनिया के जियोपॉलिटिक्स पर बहुत एक बड़ा प्रभाव होगा.
Okay, those are all the reactions to this exclusive interview of Prime Minister Modi with moneycontrol.com. Moving on now through the third headline now. Crude prices hit the highest level in 10 months as Saudi Arabia and Russia extended supply cuts to the end of this year. Brent crude breached $90 a barrel in intraday trade. Manisha Gupta joins in with more. Manisha, tell us more.
The crude oil prices are trading at a 10-month highs now and trading at $90 a barrel. We have seen a strong 7% gains in the previous week itself. The strength in crude prices comes in after Saudi Arabia and Russia both have said that they will extend output cuts, and these cuts will continue until December 2023. Well, the markets were prepared until for October, but until December end for the next 4 months as well would mean that you would be looking at tightness in the international markets because of the supply cut. So Saudi Arabia now will cut 1 million barrels per day of an output cut. Until December, they will be producing 9 million barrels per day. Russia would be cutting exports by 300,000 barrels per day until December end. So even with India buying less and China improvement in demand coming on, this kind of cut will lead to tightness. So much so that now we are trading in a backwardation. That means that the crude prices right now are more expensive than what they are 2 to 3 months down the line. But that could really change going forward. The crude prices have continued to surge even with the dollar index trading at a 6-month highs. And the markets do believe that going forward, you will also be looking at the hurricane season, the winter demand, and ahead of that, markets already are pricing all of that into the markets right now. We spoke to various banks and brokerages in India and outside, and most of them feel that $95, $100 and $102 a barrel as well is a possibility now before this year ends.
Okay, so that is the big headline. Crude prices above that $90 per barrel mark. Thank you, Manisha, for bringing us all those details. Time for a break now, but stay tuned. We'll be back in a bit with all the other headlines that we are tracking for you. Welcome back. You're still tuned into Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. Geo Financial Services fell over 3% at the start of trade as the stock will be excluded from NSE indices starting tomorrow. However, the stock ended the day mildly in the green. Nigel D'Souza is here with the details. Nigel.
Well, that's right. Geo Financial Services was in focus today because from tomorrow, the Nifty gets back to having 50 stocks. Geo Financial Services will make its way out of the Nifty, and that's why today you had a bit of a rebalance that took place, particularly from the passive funds. As we know, Geo Financial Services is the financial services arm of Reliance Industries. It got spun off on July 20th, and from August 21st onwards, it kept trading, on the exchanges itself. The problem was it kept hitting circuit. But in the last couple of days, it didn't hit circuit. So that's why it fulfilled the criteria to make its way out of the Nifty. But in the last hour, last 30 minutes, you saw passive funds, that was selling because they have to rebalance their portfolio. So more than 10 crores of volumes is what we did see. But most of that was lapped up. So that's why if you look at the intraday chart, there was a fair bit of volatility, particularly in the last 30 minutes or so. Effective tomorrow, Geo Financial Services will not be part of the Nifty, and the Nifty gets back to hosting 50 stocks rather than 51 stocks out.
Okay, take that point, Nigel. But of course, standard disclaimer playing for you on the screen as well. And that is something that you should take note of. Reliance Industries, the promoter of Reliance Jio, also controls Network 18, which owns CNBC-TV18. Okay, moving on to more stocks on our radar. Torrent Pharma was buzzing in trade after emerging as a front-runner in the race to acquire pharma major Cipla. As per reports, brokerages seem bullish on Torrent as the competition intensifies. Ekta is here with the details. Ekta.
Well, I'll start with Nomura, which has written on Torrent Pharma. They have a buy. They've raised the target price of on the stock to 2199. According to them, the likely acquisition of Cipla makes strategic sense. Execution will be key. Acquisition should allow Torrent to diversify into international markets. It will help diversify, particularly in the US, where it is underinvested. The acquisition should also provide scale and niche presence in the US generics. They see cost synergies in R&D and generics front end, which could exceed 1,000-odd crores. IIFL has written on Torrent Pharma as well. According to them, Cipla acquisition will be a better strategic fit for Torrent than Dr. Reddy's, which is the other speculated name. Torrent and Cipla merged entity would rank among the top 3 players in 10 key therapies in the domestic market. Torrent's scale in the US market would increase 6x. They will get access to Cipla's rich pipeline of inhalation as well as complex injectables. They have a buy on Torrent with a target price of 2,400. They have an add on Cipla with a target price of 1,150 and a reduce on Dr. Reddy's with a target price of 3,900.
Okay, that is about Torrent Pharma, but Ekta, stay on. Multi-specialty hospital operator Jupiter Lifeline Hospital's IPO opened for subscription today. The IPO size actually was reduced to 542 crore rupees versus 615 crore rupees, which was planned earlier. The company has already raised 261 crore rupees from 39 anchor investors. These are the basic details, but tell us more.
Well, yes, another hospital company which has hit the markets with its IPO, Jupiter Hospitals. The issue opened today. It is up till the 8th of September. Price band 695 rupees to 734 rupees. The issue size is 851 crores to 869 crores. Fresh issue of around 542 crores. OFS of around 327 crores. It is the company owns 3 multi-speciality hospitals in micro markets in the Mumbai metropolitan area as well as the western area. Hospital each in Thane, Pune as well as Indore. Currently, they are also building a multi-speciality hospital in Dombivli with over 500 odd beds. One of the positives is that they will be using the fresh funds which they are raising from the IPO to repay all of their debts. So post the IPO, they are expected to be a debt-free company. They have cash on books to the tune of around 150 to 200 odd crores. Consolidated occupancies for the company currently stand at around 63% spread across all 3 of the hospitals. But the company had indicated that Thane, which is basically where they get majority of their sales from, is currently generating occupancies of around 70%. Indore is a relatively new set of operations, and those occupancies are eventually expected to ramp up, currently at around 40 odd percent. Pune is in mid-50s, also impacted by a recent expansion in terms of beds that they have undertaken there. Margins, according to them, can sustain at around current levels. They say that there is some scope in terms of improvement in margins as their Indore facility does ramp up going forward. The company is eventually looking to expand around to around 2,500 odd beds in the next few years, focused on micro markets. In terms of revenue, it was up 22% in FY23, margins 23%, profit up around 43% on a year-on-year basis. It's trading on a trailing basis on an EV to EBITDA basis at around anywhere between 21 to 22 times, so a little more expensive than a couple of its peers such as Yatharth as well as HCG. Now, however, just important to note that a lot of the hospital companies have seen interest, and I'll leave you with a couple of the gains that we've seen from the issue prices for these recent hospital companies that have hit the market.
Of the 542 crores that we are raising in primary equity, most of it will go towards debt repayment. We have about 500 odd crores of debt. So post IPO, we'll be completely debt free. Okay. Balance, of course, will be used for some general corporate purposes. Okay. The way forward in terms of the growth strategy is that once we become debt free, it will leave more free cash in our hand, and that we plan to use to plow back for further growth of the company.
Okay, all right, that's about the healthcare space, but a lot of stocks from the gas space, they were buzzing in trade as well today. So the stocks like Petronet, LNG, GSPL and GAIL, they were buzzing in trading session today. Now, we've been talking about how there is a higher power consumption that we saw in the month of August, and that is something which has driven rally for gas stocks as well. How's that? Well, first up, we've been speaking about how power demand touched lifetime high of 234 gigawatt. This is in the month of August. Now, usually power is generated using coal. The highest proportion goes there. But in last couple of days, we have seen higher gas being used to generate power as well, as per the data. Now, in the month of July, the units used or generated for gas consumption in power was at 2,238.58 million units. But that increased by 58% to 3,552 million units in the month of August. Not only that, the targeted gas power generation in the month of August was at 2566 million units, but the used gas was at around 3552 million units. So there is an increase there as well, targeted versus the actual use here. Now, even in the month of September, where we are seeing peak power generation coming back, the targeted gas-based power generation was at 334 million units, but it has come in at 710 million units, which is actually double of what the government or the companies were planning as well. The other reason which is working for gas stocks, this means higher gas consumption. The other thing which is working for gas stocks is the fact that crude prices, as we have been saying, are at a 10-month high. They've crossed that $90 per barrel mark, and gas economics are better than crude at the current prices that we've been talking about. Maybe people will use more gas because crude is not as affordable. But of course, this change doesn't happen overnight. It takes some time. But considering that it is by the end of the year that we'll keep seeing output cuts, it could be a longer term phenomenon as well. Now, how does Petronet LNG benefit from this? It is a company which imports LNG, sets LNG terminals, so that would mean higher gas demand and higher imports coming in, and that is something which will increase utilization for Petronet LNG at their plants as well. For Gujarat State Petronet Limited and GAIL, they are the transmitters of gas to other sectors like power sector, fertilizer sector. Higher demand from power sector would mean higher volumes. That would mean higher revenues for them, and that's why these three stocks were on our radar today. Of course, we'll have to see whether this peak power consumption or generation continues and whether more gas will be used for the same or not. But for now, that's the story that we are tracking for you. Moving on now, SoftBank's chip designing company ARM Holdings has launched an initial public offering with a valuation of $52 billion this year. We learned that the prospective buyers, including Apple and Alphabet, are likely to buy up to $730 million in shares at the IPO price. Hormaz Fatakia joins us with details on this one. Take us through the contours of the IPO, Hormaz.
It is the largest tech IPO. Before I get to the cut in valuations, it is the largest IPO in almost 2 years. And tech IPOs had taken a bit of a breather over the last 2 years because interest rates went up, so investors turned cautious. But now ARM, the SoftBank chip designer, is finally taking the plunge. And I'll tell you more about the issue first. Now, they've set the price band at $47 to $51, which implies a valuation of around $54.5 to $55 billion. Now, that valuation raises a bit of a question mark because just 3 weeks earlier, SoftBank had acquired the remaining 25% stake in ARM, which it does not directly own through its Vision Fund, at a valuation of $64 billion. So now the valuation is at a discount when it comes to the IPO. Now, most of ARM's customers, which includes the likes of Apple, Alphabet, Nvidia, all of them are coming together and buying shares in the IPO, and that total comes up to around 735 million. Now, what does ARM do? Well, most of our existence revolves around ARM because 99% of the world's smartphones use ARM-led technology, and 70% of the human population uses devices that are based on ARM's technology. Now, when it comes to SoftBank, this is not the first time that ARM is going public. It was a listed entity both in London and in New York until 2016 when SoftBank acquired it for $32 billion and took it private. Now, in 2020, Nvidia had announced a plan that it wanted to acquire ARM in a $40 billion deal. Now, over time, that deal valuation went up to $80 billion, and that is because it was a cash and stock deal. So as Nvidia's share price went higher, the deal valuation was directly proportional and it moved higher too. But the regulators both in the US and the UK threw a spanner in the deal, saying that it will kill competition and it should not happen at any cost. So eventually both companies gave up in 2022 and the deal was called off. And this was the trigger for this IPO, and this is the ARM IPO. It will be interesting to see the response, whether people are cautious or they give an arm and a leg to buy those shares.
Thank you so much, Hormaz, for joining us with those exclusive details. Moving on to the fifth headline now. India's sugar prices have hit a 6-year high amid concerns over the impact of limited rainfall on production in key regions. There is speculation in the markets that the government could halt exports to control the prices. Shares of sugar companies including EID Parry, Sri Renuka Sugars and Dalmia Sugar surged more than 5% in today's trade. Manisha is standing by with the details. Manisha, what's behind the price rise?
Well, looks like that, and we've seen the sugar prices, as you said, trading at around 6-year highs in the Indian markets. It has been a 3% of a jump up in the last 2 weeks itself, and we are trading at around above 37 rupees per kg there. Also, it is a concern about the India weather conditions. Maharashtra and Karnataka, which are the two major producing states, have seen lower rains, and there are concerns of lower yields, and that has led to ISMA reducing the Indian output estimates down by 3.5% to around 31.7 million tons. Also, when you look at the export picture, I mean, that has been in debate as well. We did export 6 million tons last year, and this year there are concerns that the export could be much lesser, or it could be a halt after 7 years of constant exports, and that already is building up as a deficit in the international markets there. There are various reports suggesting, especially from International Sugar Organization, US Department of Agriculture, and the latest one comes in from a big sugar global trader, Albion, which says that 5.4 million tons of a global deficit is what you could be working with in 2023-24. So the global prices have been on a rise as well. You have the white sugar prices trading at 4.5-month highs, the London sugar prices at a 12-year highs as well. And it's not just about India. Brazil also, because of the rising crude prices, rising ethanol prices, could be diverting more towards ethanol rather than sugar, is also supporting sugar prices. And there are other countries like Thailand, Indonesia, which are also staring at a lower sugar crop this time around. So everywhere that you look, there is lesser sugar, more demand expectations, and that could be supportive for prices going forward.
Okay, higher sugar prices, higher crude prices. Okay, Manisha, thank you so much for bringing us all those important details. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates. Thanks a lot for joining us today.